As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference will be recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities. Thank you, and over to you, sir.
Thanks, Nico. Welcome everyone to the Tube Investments 4Q FY2023 conference call. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman, Mr. M.A.M. Arunachalam, Executive Chairman at TII, Mr. Mukesh Ahuja, Managing Director, Mr. Srinivasan, Director and Head Metal Form Products, Mr. K.K. Paul, Managing Director at TI Clean Mobility, Mr. Murali, Head Engineering Business, and Mr. A.N. Meyyappan, the Chief Financial Officer. I'll hand over to Mr. Vellayan for the opening remarks, post which we can have the Q&A. Over to you, sir.
Thanks, Anupam. The Board of Directors met yesterday and approved the financial results for the quarter. The board has declared an interim dividend of rupees 2 per share in February, and the same was paid to shareholders in March. Now there's a final dividend of 1.50 rupee per share for the financial year 2022-2023. And good morning, everyone. So we'll just take you through the standalone results for the quarter, and I'll give you a quick consolidated summary at the end. So standalone revenue in Q4 was at 1,663 crores compared with 1,735 crores for the same period last year. And for the year, it was at 7,236 crores compared to 6,359 for the same period last year. PBT for the quarter was 331 crores against 173 crores in the same period last year. PBT for the year is 928 crores compared with 628 crores for the same period last year. ROIC is at 54.5% for the year ended March 31st, 2023, compared with 46.8% for the previous year. And free cash flow for the quarter was at 235 crores, and cumulative free cash flow for the year was at 608 crores, which is 91% of PAT. A quick summary: the engineering business revenue for the quarter was 1,444 crores compared with 1,030 in the corresponding quarter, and PBIT was 132 as against 103. Revenue for the full year was 4,562 compared to 3,868, and PBIT was 549 for the full year as against 376, which is a growth of 46%. Metal Formed had a revenue of 347 as against 336, and PBIT was 45 as against 39. Revenue for the full year was 1,424 compared with 1,240 in the same period last year. PBIT was 174 as against 136, which is a growth of 28%. For our mobility, which is our cycles business, our bicycle business, revenue was at 155 crores compared with 249, so that was our biggest drop. And our loss was 5 crores as against a profit of 13 crores. The revenue for the full year was at 800 crores compared with 963 crores in the previous year. And PBIT for the full year was 17 as against 55. Revenue for the quarter for other businesses was 191 compared to 194, and PBIT for the quarter was 11 crores as against 4 crores in the corresponding quarter of the previous year. Revenue full year for other businesses 768 compared to 562, and PBIT was 48 compared to 36. At a consolidated revenue for the quarter was 3778 as against 3393. And consolidated profit was 403 as against 291. For the year, consolidated revenue was 14,965 as against 12,447, and PBT was at 1,593 as against 1,111. I think we've talked about the performance of our subsidiaries, but CG Power and Shanti Gears being the two main subsidiaries that we've talked to. Commenting on the financial results, Mr. M.A.M. Arunachalam said engineering and metal form product businesses continue their good performance in the fourth quarter as well. The bicycle industry continues to suffer from contraction in demand. And our bicycle business works towards cost reduction and improving overall efficiency through pricing. Overall, the company has delivered excellent results in profits and profitability. Our subsidiaries CG Power and Infrastructure Gears have registered a strong performance and delivered strong results across all segments. So let me stop with that. Anupam, and be happy to turn it over to the audience for questions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Anika Mittal from Invest Research. Please go ahead.
Good morning, sir. My first question is, during the quarter for financial year 23, I noticed a profit of rupees 166 crores from the discontinued operations mentioned in the Concall financial statement. In the notes, it is stated that CG Power has received a liquidation order for one of its subsidiaries. Could you please provide more details on the reason behind the liquidation and which item this profit belongs to?
So I think the question is on the liquidation of CG Power subsidiaries. So,
yes,
I think that is specifically talking to PSOL, or is it talking about the Belgian subsidiary?
In the Concall statement, if you notice that there is a profit of 166 crores of discontinued operations.
So Middle East. I'll answer here. So what happened was, Middle East, we have a subsidiary in Middle East, CG Power Middle East, where they had certain liabilities on their balance sheet. So since it was there in the balance sheet, once the subsidiary was liquidated, these amounts got written back into the balance sheet of CG Power and thereby got consolidated with TI. So that's the reason for this profit. That's the profit of deconsolidation. Yeah.
Means profit of deconsolidation.
Yes.
And sir, what is the behind? Sorry.
Sorry?
Yeah, go ahead.
Sir, what is the reason behind this consolidation?
What?
What is the reason behind this?
No, as you know, and ma'am, as you know, that CG Power has been kind of liquidating or kind of closing down all of its non-operational assets. CG Power had a lot of non-operational subsidiaries overseas, which they've been closing down.
Okay. Okay, sir, thanks. And my second question is, company with SBI and other multiple investors has planned to invest rupees 6,000 crores in subsidiary TI Clean. What is the rationale behind this investment and how company going to utilize this amount?
Okay. Is your question that multiples is invested in TI CMPL? Is that your question, ma'am?
Yeah. In the TI Clean, that company.
TI CMPL is a company that it is a subsidiary that's basically making electric vehicles. And so the money has been raised to basically develop and manufacture electric vehicles that we will sell. And that is the reason why we raised the money.
And how company is going to utilize this amount? Means for up to when it will utilize and in what way it will utilize?
How will we utilize the amount? So it'll go towards either product development or manufacturing, ma'am, of the electric vehicles.
Okay. And sir, what is the strategy behind acquisition of Lotus Surgical Private Limited?
So as we've spoken in TI2, we are looking at kind of new lines of business to basically diversify into, and we've talked, in several previous calls as well, saying that the medical products and consumables business will be a space that we are getting into. So this is this is the completion of the acquisition in that area.
And sir, what is the growth outlook for the next 3 years?
Ms. Anika Mittal, may we request that you return to the question
Okay.
for follow-up questions, as there are several participants waiting their turn. Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. A couple of questions from my side. One is on the existing business, both engineering and metal form, we have seen flattish kind of revenue performance on YY basis. Is there any negative impact of commodity cost deflation over here and the underlying business growth is strong? Or can you highlight any other factors which have led to weaker revenue growth?
So you're right, Jignesh bhai. Maybe it is because of the raw material prices coming down in Q2 and Q3, which we have to pass on to our customers, whatever contract we have with our customers. Because of that, it is coming down. Otherwise, on absolute volume basis, we are both engineering as well as metal form are growing. Irrespective of two-wheeler, there is a muted demand. Irrespective of that, we are able to grow it.
Would it be still growing on volume basis on double-digit basis, or any indication you can give of the actual growth, underlying growth?
It will not be double-digit, but it is a higher single-digit growth will be surely there.
Okay. Got it. And second question pertains to the mobility business. So it seems we further had losses on the electric business sitting in PBIT of mobility. So can you quantify the loss for the quarter and for the full year for e-3-wheeler business?
Yeah, I think maybe we should also change our nomenclature. So mobility business that we talk about in the income statement that I just talked about is the bicycle business.
Okay.
And TICM or TI Clean Mobility is a subsidiary, and that is the electric vehicle business. So again, Jinesh, then you can just clarify, which business are you asking about?
I was referring to the standalone, primarily the mobility business in the standalone had losses. So I believe until last quarter, the e-3-wheeler losses were sitting in the standalone side, and now the shift has happened of the e-3-wheeler to subsidiary?
No, the three-wheeler even last quarter, as soon as the subsidiary was created, which was which was March 22. From March 22 onwards, three-wheeler has always been in the subsidiary. What you see in mobility is only the bicycle business. So maybe we'll also change the language in what we call them. We'll change it. So mobility and the loss you are seeing is for the bicycle business.
And that's a one-time loss. Maybe in the Q4 we have booked it because of some internal thing, which is a one-time.
Okay. And what would be that quantum of one-time impact?
Whatever loss we are able to see that, maybe you can say
it would have been flat without. Yes.
Okay. Got it. And lastly, can you clarify on the TI Clean Mobility, what kind of valuation will this fundraise result in?
This question has been asked. We've not disclosed. Part of the reason is that it will be a variable amount, right? So we've not disclosed it from that perspective because it does depend on the actual performance of the business itself.
Range of stake which will get diluted based on this?
Jinesh, I think we'd rather not give a range.
Okay. No worries. I'll come back in queue for other questions. Thanks.
Thank you.
Thank you. Our next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So my questions are on the launches on the electric vehicle side. Just wanted to understand when are we planning to start the launches on the three-wheeler, tractors, and truck? Any updated timelines that you can share? And what has led to the delays compared to your previous expectations?
I think two things. The launch of the three-wheeler we have started now. So we've launched in the southern states of Karnataka, Kerala, and others. Currently, also the launch is going on. Products are being received very well, and we are in the process of ramping up the production for the three-wheeler actually. So that's how the three-wheeler is. In response to the question of your delays, was because of the change in the standard dictated by the government in terms of the air standards for homologation. So we had to re-homologate the product once more, for the battery, the motor, the controller, so on and so forth. So there were delays associated with that, which were, statutory in nature, and we had to comply with that. Other than that, from our trials, etc., whatever improvements we have to do, we did it in-house, and now we are launching that. That as far as three-wheelers is concerned. As far as the tractor vertical is concerned, we are in the process of developing the product. The first lot of tooled up samples for trials will be done in June-July period, and post that from those trials, whatever rectifications we have to do, we will do, and then have the homologation done and go to market somewhere closer to the end of the year. So that's how the tractor scenario is looking like. As far as the heavy-duty truck is concerned, we are in the process of now selling the trucks. We are manufacturing the trucks in a new manufacturing facility at Manesar, and we've lined up customers, and we are in the process of selling quantum. We are carefully selecting the customers and then doing some trials and then, getting into sales. But the sales will happen this month, albeit slowly. And then, we as a customer, when we get confidence, we'll be scaling up the volumes in the subsequent months. The manufacturing facility to scale up these volumes is in place. And now we are getting the market organized in terms of this to be able to do that, along with the financing, etc., so on and so forth.
Okay.
I hope I answered your question.
Yes. So just a couple of follow-ups. From your comments, I assume that the truck product, heavy truck product, has already been homologated, and the process of selling and manufacturing has started now. Is that correct understanding?
That's correct. We just got in the AIS 156 Part 2 homologation done.
Okay.
And now, we have the certificate with us. And we were waiting for that, although we were ready in manufacturing. And once we get the official certificate, which will be in a day or two, then we will be in a position to make the sale.
Got it. That's good to hear, sir. And secondly, on the three-wheeler EV side, can you clarify if we will be getting FAME incentives for these products? Are we meeting all the requirements of FAME?
We are meeting all the requirements of FAME. Till the time the FAME subsidy is there, you will be receiving the FAME subsidy. Actually, our MIS, etc., is actually totally geared. Once you invoice, and from the invoice, it is actually floated onto the portal, and from there it automatically registers for the FAME subsidy. So that's all in place. Till the time the FAME subsidy is there, we will continue to see that.
Got it. And just one last final question is on the overall capex. Just wanted to understand what is the total capex for FY24 for the standalone business, as well as for the EV subsidiaries or maybe any medical devices that we required. Any capex that you have planned for this year?
So the total capex is 800 crores. That will include kind of our existing business
as well as new initiatives.
And new initiatives. And then you have a separate capex for DICMPL, which will be in the range of about 300 to 400 crores. So 800 crores in the standalone and 300 to 400 in TICMPL.
And this standalone 800 will also include the investment that you will make into the subsidiaries as well, right?
Yes.
That's right. Things like
Right.
medical and
Everything. Yeah.
Okay. Okay. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Sir Saurabh Gujjar from ICICI Prudential AMC. Please go ahead.
Yeah. Good morning, sir. Thanks for the opportunity. My first question
Morning.
is on the engineering business. So last quarter we had talked about some muted demand from exports. So from Jan 23 onwards, how has been the trend in terms of exports there?
as we discussed last time, maybe Q4 was little bit is almost flattish, but we are able to see a good uptick in demand from Q1. So you will see numbers improving going forward in the Q1.
Okay. And in term, my second question is on the metal form business. So any traction we have started seeing in railways now?
KRS, you will take this.
Yeah, Srinivasan here. Yeah, railways, and they are in the process of making production scheduling plans, the coach factories. So end of this quarter, we are likely to see the tenders getting released. So we hope the demand to go up in the second quarter. We'll be getting orders in the second quarter. That is the outlook so far.
So in which sub-segments we are mainly focusing on within railways currently?
We'll be focusing on the coach segment, passenger, coaches.
Okay, and anything on freight side, do we plan to bring in any new products, or it would be only on the coaches side only?
Majorly it will be on the coach side. On the freight side already we have our product lines, but railways are in the process of finalizing their dedicated freight corridor plans. Once those plans are out, then we'll be ready to take on that demand.
Okay, and so my last question is on TI2 and TI3. Any further opportunities you have identified under it currently?
No, I mean, so there's nothing specific beyond what we've already talked about at this stage. Like we said, we continue the process of looking at opportunities, but there's nothing specific that we want to comment on.
And in addition to that, as of now, we are in execution mode for medical subsidy Lotus, what we discussed, it is executed, and CDMO also is going to, let's say, start the process in this quarter. Meantime, we are identifying new opportunities.
Okay, thanks, sir. That's all.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Kaushik Mohan from Ashika Stock Broking. Please go ahead.
Thanks for the opportunity and congratulations for the great set of numbers, sir. I just wanted to understand while reading your report, I just want to understand that long-term borrowing for an aggregate sum of exceeding rupees 300 crores. Can I understand why this borrowing is coming and what are this being used for?
Oh, it is, yeah, go ahead.
It's an enabling resolution which we have got. We have not borrowed anything at this point in time. Our long-term debt is 0 at this point in time. And that's an enabling resolution which we get every year.
Good. Yeah. Got it, sir. And another clarity I needed on, sir, what is your this time the cash conversion cycle has been very strong. Can we assume this trend to be in the future?
Cash conversion.
Yes, we continue to be focused on the cash generation, and we'll continue to deliver on that.
Got it, sir. Thanks for that.
Thank you.
Thank you. Our next question is from the line of Abhishek Podar from HDFC Mutual Fund. Please go ahead.
Hi, Abhishek.
Mr. Abhishek, your line has been unmuted. You can go ahead with your question.
Hi, good morning. Sorry, my line was muted. Hi, sir. Regarding this TICMPL, wanted to understand how should we think about the economic interest that the company will retain in this EV mobility business. Some understanding that what is today and how it will be shaping up, in future.
So I think you all are ending up with the same question. So let us then think through how to communicate this, so that you guys get the answer that you're looking for. We understand kind of what you're trying to, why you want it. So let us think about how we can kind of communicate it in a fashion that will be useful.
Understood, sir. And sir, also about this business, currently it's a EBIT loss. So any internal targets, that you want to share that when it will be breaking even at, let's say, EBITDA level, at PBT level, timelines or some understanding in how many years it could take?
I think it's very difficult to say at this stage. I mean, our current plans basically say that it'll take a minimum of 2 years, right? So I think that's the best assumption we can take.
Right. And should we assume that three-wheelers will be the first one to break even and followed by heavy duty and then the tractors?
I would say you can't determine that, but it'll be something. It'll either be heavy duty or three-wheeler. Yeah.
Understood, sir. Okay. Thank you, sir. All the best, sir.
Thank you.
Thank you. Our next question is from the line of Sundar S. from Avendus. Please go ahead.
Good morning, sir. Thanks for the opportunity. So I have 3 questions. The first one.
The line for Mr. Sundar has dropped. May I request the management? We move to the next question. Our next question is from the line of Mr. Manoj Bajpayee. Please go ahead.
Hi. Good morning, and thanks for giving me the opportunity to ask a question. This is more strategic in nature, especially on the strategy on the seeding new platform, that is T12. What I wanted to understand was, are there any earmark figures from cash flow which you think that this is the amount of or percentage-wise we are going to deploy over the next 3, 4, 5 years into this particular strategy? And what are the kind of timelines you're looking at, probably stopping this or probably seeing how your investments plan out and then taking the next level of call? So that's a question which I have.
Yeah, so if you look at it this year, about 50% of the cash flow will go towards this, and 50% will go towards existing TI1 cash flow expansion opportunities. So I think that number can vary, between kind of, first off, so the first thing is whatever TI1 needs, right? They will get, right? And so then that kind of helps us determine how much we can put towards TI2. There are 2 things that we look at, right? Which is like we don't, at least from TI's perspective, we don't see. We've always articulated this, right? Saying that the maximum we will go up to is 2 years negative free cash flow, and we continue to kind of reiterate that same comment. That's kind of core to our planning. And this far we've been able to manage with pretty much no debt, but that is central to our planning as well.
And in terms of the product portfolio expansion or probably the lines of business which you are looking at, currently you have probably invested in 2, 3 similar line of businesses. One is into mobility, second is into, say, automotive industry. So are there any specific areas which you are specifically looking into this particular strategy of seeding new businesses?
Yeah, see, it's basically it's focused on I think we've talked about this criterion a couple of times on previous calls, right? Which is to basically use so some of it is based on kind of where we see India's GDP growth coming from, where how India is going to shift over the next 10 to 20 years. That is the first kind of gating factor. The second is we've talked about using India as the market to kind of learn the opportunity and then expanding, using that as a way to kind of start export to the rest of the world, but India being the first market. So there's several different filters, and we've talked about these filters in prior calls as well. So none of those criteria are changing, I would say, from our perspective. and we continue to kind of use the same criteria and the same approach to filter industries that we look at.
Just last one, a small one, that what is the kind of time frame you are internally looking to give to a particular business in terms of its success, or rather putting the plug on this business if it is not working for you? So you have any sort of internal thought process on that maybe 3 year, 4 year you'll give to a business and then take a call?
So I think in between 2 and 3 years we have like what we would call a go no go check, right? Okay. And that is basically seeing whether we continue or not, right? But that doesn't necessarily mean that the business has to scale within that time frame. Mm-hmm. It just means that the conditions with which we went in need to be maintained, and we need to continue that we are convinced that the business continues to be a good opportunity. So that's basically how we're looking at it at this stage.
Okay, thanks. That's all from my side. Thank you very much.
Thank you. Our next question is from the line of Mr. Sundar S. from Avendus Spark. Please go ahead.
Good morning, sir. Am I audible?
Yes.
Yes, thank you. So the first question is on the standalone business. I just want to understand, has all the raw material impact been passed on, or should we see some impact coming through for the next few quarters too?
We have various contracts with the various customers. Maybe some part is already passed on and something will happen in the Q1 also. It is not that entirely is passed on.
Perfect, sir. Thank you. And the second one, Mr. Vellayan, can you show some thoughts in terms of the venture into the CDMO, because this is something that was not discussed earlier. What was the thought process here, and how should we look at this business from a 3-year perspective?
So so basically we've been having discussions with Govind, who's basically kind of helped found the business with us. I would say for over close to between 18 months now, almost, I would say. The reason really is that we see CDMO as a huge growth opportunity for the country itself. As you know, globally, a lot of it has been done in China, and the large CDMO people in China, I would say, are almost like 10 times the size of the largest player in India. With what's happening kind of geopolitically, a lot of that is beginning to shift now towards India, and is, I would say, strongly in India's favor. So our belief is that over the next decade, it is a good opportunity to kind of grow this business. And like I said again about the businesses we are really taking a 25 to 30 year view. So that is our thinking kind of going into this. And specifically towards our plan for the 3 years, Govind, do you want to jump in and kind of provide your perspective?
Yeah, I think 3 years is a period which is too short on the manufacturing per se, and that you would agree with us, because we have to get the plant ready and file the product and get it inspected. And that is the time frame by which I think all this would happen, so that I think we'll be able to promote the manufacturing business more with the customers, including emerging farmers and innovator companies. But by the time, I think the lab would have started delivering on the FTEs, is what I would say over the 3 year period.
Right, sir. Thank you for that perspective. And one last one on PICMPL. Should we assume that CI's investment into PICMPL would be limited to 750 crores that is committed as of now?
Yes, we've already said that.
Okay, so it wouldn't exceed beyond the 750 crores that you've committed?
No.
Perfect, sir. And last one is on the FAME subsidy, with several state governments indicating that they would want to pull out of the FAME subsidy. How do you look at this impacting the PICMPL business, specifically on the three-wheeler side?
So like we've said, in our other platforms, both on tractor and on FAME is not there. But even on three-wheeler, we don't have any FAME in our business plan and assumptions beyond March 24.
But you don't see that impacting the penetration of the category itself? Because I thought break-even significantly widened once you remove the FAME subsidy.
See, we believe that all of these categories, have the ability to kind of break even over time, right? Now, kind of, would it accelerate? Absolutely. So would we support it if FAME was extended? Absolutely. But, does it mean that we will not kind of pursue the business if FAME was not there? No, we will continue to pursue the business.
Fair enough, sir. And one last one, can you throw some light on the capacities that we currently have on the EV side, on three-wheeler, HCV, as well as e-tractor? And where are we looking to ramp it up with the cash flow that's coming?
So, three-wheeler, okay, go ahead, Paul.
On three-wheeler, three-shift basis, we have a capacity of 90,000 three-wheelers annually. On the tractor side, the capacity is about 25,000 in the phase one, and so is for the heavy-duty truck. So, we've covered up in terms of capacity for a year and a half. And, post that, we'll see how things pan out.
Heavy-duty will not be... Yeah, heavy duty won't be 25,000. I think you said will be 25,000. Heavy duty will be 2,500.
2,500, but on three-shift basis, we just talked about two shifts.
Yeah, certainly. But not, so 2,500 on the heavy duty side, 2,500 to 3,000.
Perfect, sir. Thanks for the clarification and all the best, sir.
Thank you.
Thank you. Our next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi, sir. Thank you so much for the opportunity. A few questions. Sir, on the standalone part of the business, you have substantial contribution from a two-wheeler, which is kind of coming in. So any outlook on that industry, any thoughts in terms of recovery on that and sustenance of the volume growth? Any thoughts on that, sir?
Abhishek, maybe let's say, like we know that we can't control the industry. What we can do is internal. How do we, when the industry is not growing, how can we focus on the other, let's say, industry like CV is doing pretty well, PV is doing pretty well. There is a good exports opportunities available, and government is spending huge money on the construction side of the story. How we can leverage that? So we are working on that. At the same time, we have a sufficient capacity. Even two-wheeler does well, we'll be able to participate that. And here we are working on some new product development because the introduction of EV and the light weighting, it is going to have some opportunities. So we are going to participate that also.
Okay. So it is fair to assume, sir, the standalone capex that you've spoken about, 50% of that 800 crores, majority of that, will kind of go into these segments which are seeing growth areas and not so much into two-wheeler. Is that the way to look at it?
As of now, you can.
Yeah. There's no more investment in the two-wheeler side. We've got enough capacity.
Okay, great. That's helpful. So the other thing is, to one of the OEMs whom you already provide some of the products, they have spoken about a large investment in Chennai. You think that can be beneficiary to you? I think last week they have announced that. So you think that can be beneficial to you over the next 3 to 5 years? Any thoughts on that?
Obviously, yes. Like that maybe TI participates, all the OEMs maybe they're fairly present. So any investments planned in the new, whether it's in south or west, we are surely going to participate that.
Okay, great. So just one question to Vellayan, sir, in terms of if you look at the new investments in last 12 to 18 months, you've got into medical devices. You also have spoken about electronics, now CDMO, EV also, it's kind of ramping up. So obviously we've also spoken about many more areas, but for now, is it fair to assume that over the next 12 months you would want to consolidate and bring all these incubating business to a certain level, and then will you look at investments into new, or how should we look at it? Just your thoughts there, sir.
Yeah, obviously, kind of these businesses now are going into execution mode, and so that is definitely the intent, right? So like we said with some of these, you can't time all of these perfectly. What we will do is continue to manage our cash flow with the criteria that we've specified to you, right? But you are right in the sense that with a lot of these businesses now, our focus is moving more to execution mode and being able to kind of get performance on the existing business.
So I was more trying to understand on your bandwidth cash flow, we have seen the way you have executed, but on your bandwidth, just from that perspective. So that's the only way we're trying to understand.
Yeah. So I think your statement is fair, but like I said, the exploration side is something that will always be an ongoing exercise, right? Because it is part of kind of identifying things for a long term. But a majority of my time is going to be spent kind of now on kind of ensuring that the execution of the existing businesses happens more successfully.
Great. Thank you so much, and wish you all the best. Thank you.
Thank you. Our next question is from the line of Prithvi Raj from Unifi Capital. Please go ahead.
Yeah, I just have one question. So right now we are getting into many new businesses. So 5 years down the line, how do we see these revenues contributing to the overall tube business? I mean, any rough sense on some percentage number?
See, it's a bit tough to predict. I think we've always kind of guided that TI1, our current belief is that TI1 will grow at between 12 and 15% a year, right? Somewhere in that range. But, TI3 has kind of always been, it's been a bit kind of, it's very difficult to kind of predict, what the revenue contribution would be, right? As you can see, kind of Concall, now our other businesses are kind of as large as TI or maybe even larger. So it's a bit difficult because of the lumpy nature. But, obviously, our broad view is that, each of these businesses has the potential to be as large as TI is today, which is why we're getting into them. Right? So whether they reach that potential within 5 years or, 8 years, we need to see, but that is the belief with which we're going into it, right, with each of these new businesses.
Okay. And one question on TI Clean Mobility. Is it possible for you to quantify the losses in this quarter and in this financial year? I mean, TI Clean.
The losses for the quarter were about 28 crores.
And for the year?
No, we can't predict for the year.
For the
previous year.
23 full year.
102 crores.
Okay. Thanks, sir.
Thank you. Our next question is from the line of Dhruv Bhatia from Bank of India Investment Managers. Please go ahead.
Hi, good morning, sir. So my question is on Shanti Gears. Do I understand that you don't like to answer on them, but let me try my luck. I just, generally on a quarterly basis, you do provide the order inflow and order book for Shanti Gears. But this time you haven't provided. If it's possible to share that data.
Ladies and gentlemen, please stay connected. The management line has dropped. We will reconnect them quickly. The line for the management is reconnected. Mr. Dhruv Bhatia, you can go ahead with your question. Could you please repeat your question?
So actually my question was on Shanti Gears. As I was saying that, I do understand you don't like to answer questions on Shanti Gears on this call, but let me try my luck. Actually, generally you provide the quarterly order inflow and order book for Shanti Gears, but this time around you haven't provided. Is it possible to share the order inflow and order book for Shanti Gears?
I would say again, yeah, because again, we don't want to start this off because again, the same kind of trend starts up. I would just suggest you can write do we have you can write to kind of even TI investor relations you want. And, with your specific questions, and if it's shareable data, then we can see, we have to disclose it in public domain to everybody. So we'll think about how to do that.
Sure. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Hardik Doshi from White Whale Partners. Please go ahead.
Yeah, thank you for taking my question. My question is actually related to CDMO business. Typically, in like most of these diversifications or acquisitions that we've done, it's been more towards auto or auto related, or that there's actually hard manufacturing that's done. I just want to understand from the CDMO perspective, what is the tubes or TI's value addition out there?
See, I mean, again, if you think from a multiple, I always think of it as you take so many guys who have grown, right? Kind of one of our models is Danaher, right? And when I look at Danaher, what they really bring to the table is, the approach to the business, what they call DBS, right? Or Danaher Business System. And, we are trying to kind of define the same for ourselves in what we call TI way, right? And so actually what makes Danaher, I would kind of argue, as competitive is the fact that it can bring DBS to every business that it goes into, right? And similarly, the way we look at it in terms of new businesses, we see if there's an opportunity to bring that kind of thinking to every business we go into. And then that specifically then kind of has implications for sales and marketing, for operations, and for R&D. And, our approach to sales and marketing and how we can help. So having access to kind of, what would a larger and more scalable global organization, obviously kind of helps you think very differently from how a startup would approach it, right? And so I think that has inherent advantages. Those two things, right? Kind of, the access to a global organization and, using TI way, just like Danaher uses DBS, I think is the core to kind of what we can bring to it.
Just continuing on that, TI way, have we is that a detailed kind of guidelines and, action plan or something that you already formulated, and is it possible for us to access that or see that?
No, so it is something we use internally. It is kind of continuing to evolve, as we continue to work with Shingijutsu and other lean consultants in that process. But it's not something that we share in public domain like Danaher shares DBS.
Okay. Great. Thanks so much.
Yeah, thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Vimal Gohil from Alchemy Capital Management. Please go ahead.
Yes, sir. Thank you for the opportunity. My questions on TI Clean Mobility have been answered. I just had a question on the standalone piece regarding the others segment. My belief is that we include our industrial change export business in this. The YOY slight decline that we see in these businesses would largely be explained by that, or is there any other segment which might have contributed to that? Thanks.
Yeah, so you rightly mentioned, actually it's not just industrial change exports, the entire industrial change is part of the other segment. Your assessment in terms of decline in the exports is okay. It's correct.
So could you provide some more detail around the other products that are included in the others?
So I guess
what were the performance there?
Some of the other businesses which were incubated in the others which has now been consolidated, which is our TMT and certain other businesses, along with the industrial chain.
Right. And how are these businesses doing, excluding the industrial chain, so the TMT, the other?
So I guess it's a commodity business at the moment, but we've reached a stage where we know how the business is performing. So we are still evaluating, as Mr. Vellayan said, we are looking at a 3 to 5 year time frame where we decide in terms of how we want to go ahead and do these businesses. So yeah, so we are in that stage where we'll probably we have a dedicated business team which is handling this, and we take an appropriate call on that. As of now, there's no
Understood. And the export business is expected to improve. When you said that the overall exports, that would include the industrial chain exports as well.
Yeah. Mr. Mukesh already alluded on that. I think he mentioned that we can see some uptick in Q1 and onwards.
Understood, sir. Thank you so much and all the very best.
Thank you.
Thank you. Our next question is from the line of Mr. Anupam Gupta from IIFL Securities Limited. Please go ahead.
Yeah, just continuing on the exports piece, sir. Firstly, what was the total export share for the standalone business in FY23?
It's about 17%.
Okay, and if you were to split it between engineering and industrial chains, what was the share if you are sharing that?
Generally report together, Anupam, as of now, maybe at a TA level export numbers, and we'll continue to do that.
Sure. And would you say that this target to maybe double this in 3 years in terms of share, is that target still on, or do you see any changes to that?
Surely we want to double it, but maybe 3 years will be a little tougher, but we are working on that.
Okay. Understand. So, the second question is, you said the capex and investment for standalone is 800 crore for FY24. Is it right to assume that it includes the 285 crore for CDMO and 233 crore for Lotus in that, or is it separate?
Yes, it is inclusive of that.
Okay. So the balance, approximately 250 crores, which you'll do apart from these two, is targeted towards what, sir, in terms of the standalone business?
It is existing businesses. Maybe let's say what we do with engineering, metal form, will go towards those capexes.
Okay, understand. And the 300 to 400 crore capex which you said for TI Clean Mobility, what is that directed toward? Any specific thing which you can highlight there?
As Mr. Velan already mentioned, it is going towards the product development and building manufacturing plants. It is going to go towards that.
Okay, understand. And just one last question, sir. Any update on the optic business which you had trials on for?
So, Anupam, it is still going. Maybe we have made a progress internally in terms of quality and all these things. In acquisition of customer, maybe still working is in progress, and we'll share with you once we are able to crack that.
Okay, fine. That's all from my side, sir. Thank you.
Thank you. Our next question is from the line of Rishit Javeri from Pi Square Investments. Please go ahead.
Okay, congratulations, sir, for the good set of numbers. So I wanted to know your growth outlook for FY24 for the standalone segments.
Generally, maybe let's say we don't share forward-looking numbers, but we are confident to grow better than the industry growth. That's how maybe I can give you an indication as well.
Okay, and also to mention that the bicycle business had seen a demand pullout from the market. What's your take that? Are you seeing any demand uptick in the next 2 quarters?
Yes, as of now, let's say this tough business, maybe demand is contracting. So we are internally focused how to cut down cost and do it. Whatever we are doing for existing business like export development, that work we have started to build capabilities, and we are hopeful to revive it.
Okay, sir. Thank you so much and all the best.
Thank you.
Thank you. Our next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. A couple of clarifications. So, there is other income which has gone up quite substantially in this quarter. Is there any one-off, or this includes dividends from some of the subsidiaries?
Yeah, we have received dividend from CG Power. 133 crores is included in that.
Okay. Got it. And secondly, when we look at optics lens business, we're clearly focused on glass lenses. But with the evolution of mobile manufacturing scenario in India, are we also looking at plastic lenses, given that opportunity also will be very large?
So
Yeah, so not at this stage, right?
Okay.
So first, let's see if we can stabilize this business, then we can look it up.
Got it. And lastly, with respect to the 1,200 crore fundraise through the private equity on the EV side, our investment requirement in the foreseeable future would be about 750 crore in the three businesses put together, right?
No. So just to clarify, if you're talking about TI's investment into it, TI's investment into it, the incremental investment amount is only about 120 crores.
Sorry, I meant...
The rest of the 750 crores is already gone into the business.
Yeah, sorry, what I meant was the investment requirement of those businesses. In the past, we had indicated to 50 crore per business on the EV side. The capex requirement or the investment requirement of each of those businesses. So, in that context, I was just trying to understand, is there any change in plan? Are we accelerating our capex in those businesses given the opportunity which is there, or 750 crore numbers for the three businesses still holds true?
So again, what we articulated was when we talked about the three-wheeler business, we said that we've got that business up and running for around 300 crores, right? Like right. Now, as you know, with both the truck and the tractor, we acquired companies, so there was an outlay towards that acquisition. The second outlay is towards manufacturing and development, right? So if you include manufacturing, kind of the full stack development team, and the acquisition costs, obviously that combined is going to be more than 300 crores for each of the businesses we are sent to market.
Got it. That clarifies. Thanks for all the best.
Thank you.
Thank you. Our next question is from the line of Mr. Anupam Gupta from IIFL Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. Just one last question I had. So margins obviously in this quarter benefited from the raw material pass-through which you did. Incrementally, let's say if you assume raw material largely to be a non-event, what sort of margin expansion do you think can happen over the next 3 years in the core business?
We will continue to maintain the current margin, maybe let's say, because we are closer to what we have given the guidelines in the past. And that's the answer to your question.
Okay, fine. I think we don't have any further questions. We can close the call. Valen, if you have any closing remarks, we can take that and then we can close the call.
No, Anupam, I think that's good. Like I said, the important thing for us is, TI1 continues to perform strongly, and so we think that performance will continue in this financial year. And like you said, it is going to get important for us to now, especially on, I think the first one out of the gates will be clean mobility. So to start seeing some growth in that this financial year, which we believe we will start seeing. So that's our general kind of outlook. So we continue to be quite optimistic about things going into this year, and we look forward to catching up on the next call.
Sure. Thanks a lot for the management for the time and all the participants as well to join the call. Thank you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect our lines.